go. Now we are going to look at how to pull off those financial statements from the adjusted trial balance. This is the flow. Remember the flow. Now we're going to look at how to pull each of these off. So let's go to the income statement first. All of these, each one of these balances are directly from this right here. Right, this group right here are the numbers that you'll find here. So, and this is actually just a simple, very simple income statement. So you're going to do your totals here, and then the full total to over here to the side. Again, you have your totals, and then you come up with a net income, which goes to the owner's equity statement. And this information, the totals for these accounts will come directly off of right here. You've got your beginning here, and you have your withdrawals. So this is your beginning capital. And you are going to add that 7,105 income, first of all, to the capital. Then you need to remove what the withdrawals were from the owner and come up with a new capital for the December 31st. That number then gets transferred to the balance sheet. Again, the balance sheet numbers all come from the adjusted trial balance. This gets popped in there from the owner's equity and should balance out the balance sheet at that point. Now, also in this particular review, it talks about a classified balance sheet, which before you'll notice we're just kind of we have been just adding everything together without classifications. Now this balance sheet is called a classified balance sheet because it has what do they call, subsections for current assets and property and equipment and current liabilities and long-term assets. Before, we just kind of put these all together under assets, and we put all the liabilities and owner's equities under assets. Now they pulled them out and say, these are our current assets, and this is what is involved. These is our plant, property, and equipment, and this is what is involved with that. So this is a classified balance sheet. With examples of current assets, you can see cash, accounts receivable, notes receivable, supplies. These are all current assets that will be used within 1 year or less than a year. And fixed assets, whoa, that's a hard one to say evidently. Fixed assets are long-term assets, and they will last, and you will have them over a year's time. And that's usually property, plant, and equipment. Land is included in that, but that land is for infinity, right? You don't depreciate land, but you will the equipment and the plant. Another subcategory is your current liabilities, and those are liabilities that have to be paid within the year. So they're called current. Here's your long-term liabilities. Those are not due until past a year, so they're called long-term, and they involve long-term notes, payables, mortgage payment, bond payments, things of that nature. And then you always have your owner's equity. And right now we're looking at proprietary ships, so you only have one capital account. When we get into corporations, it gets a little more complex. So that is the financial statements, and this is a classified balance sheet. And this is your income statement, this is your owner's equity, and this is the balance sheet we've been using. All those numbers flow directly out of this column, the adjusted trial balance. So next off, what do we do next? We're going to close the accounts, and that's our next video.